very few people own precious metals. It just amazes me that the opportunity still exists to get into this market with everything that is going on in the world right now. Hi, this is Mike Maloney, and I've got Ronald Stöferle on the phone with from Incrementum AG, and they've got their latest In Gold We Trust report. And I'm looking at his chart book. Ronnie, how are you doing?
Very good, Mike. How are you?
Great, great. So, you've got one chart in here on page 13 of Did the Everything Bubble Burst? Can you tell me a bit about this chart and what you see in it?
Well, it shows financial assets of households versus disposable personal income. And you can see on this chart, it starts in 1970, and then basically it was in an uptrend since the beginning of the 1980s. And normally in the course of a recession, this ratio goes down significantly because normally financial assets drop dramatically. Now, I have to say that this chart is based on quarterly data because those numbers that we use aren't updated more often. But if we have a look at financial markets over the last couple of months, I think this was really a development, a reversal that nobody would have expected in spring. I think that I expected some sort of a dead cat bounce, but I really didn't expect that most markets, be it equity markets, real estate markets, but also the art market, luxury things, and so on, would actually go bananas. And my explanation for that would be that we're really in the so-called crack-up boom, like Ludwig von Mises, famed Austrian economist, described. And I think this is a stage where people are really losing confidence in paper, be it paper currencies, be it bonds. And I think that, actually I was in Munich quite recently, and it was interesting, those little informations that I find always fascinating. I talked to somebody who runs a really expensive restaurant, and I said, how is business going? And he said, it's going so great, and this is really a very, very expensive place. And he says, actually, everything is reserved for the next couple of weeks. And I said, what about like the normal restaurants, the cheaper places where you go for a decent meal where the middle class goes to? And he said, they're all suffering big time. They're really having a hard time. So I think this is also some sort of the sign, some sign of this so-called Cantillon effect. So that basically the 1% that own assets, that own real estate, equities, that are perhaps levered, they profit from actually this enormous reflation that central banks just started. And I thought that the cracker boom would happen earlier, but I think this is it.
I have to agree with you. This is an amazing chart, and it just shows, things are sort of in balance when you're down, on this chart in that 4 range where their financial assets are 4 times their disposable income. It was financial assets were undervalued in 1980, but you can see where the bubbles are, and you look at the peak that this hit, and it's never been that high in history, in all of human existence. So let's move on to the next one. I think we'll go down to gold. We'll get right to gold and silver. And on page 17, you have a table of gold's performance in all the major currencies, and then you've charted it on the next page since the year 2000. Can you just give us a quick overview of that, your take on it?
Yeah, green numbers obviously show that it's a positive year, and red that it was a negative performance. And you can see that basically since the year 2000, there's the overwhelming majority is green. So of course, we saw this big correction in 2013, this mid-cycle correction. It actually already started in 2011. But I think what's really interesting is first of all, that already starting in 2016, you're seeing in basically all currencies positive performances. And now, last year, 2019, gold did well in every currency. It was up on average 17.7%. And this year, since the beginning of the year, on average, it is up 22.3%. Now, in dollar terms, it's 22.6%. In euro terms, it's a bit less. But I think another important thing is the average over this very long time span, 20 years. And I think, in dollar terms, gold was up on average 10.3% every year. But I think this very little difference between the US dollar performance, the euro performance, the British pound, the Australian dollar, and so on, it shows you that basically all fiat currencies are just devaluing versus gold. There are, of course, years when the euro is stronger, there are years when the dollar is stronger, but over the long term, they just devalue. So from my point of view, and I think this is something that you would agree with, it is not the price of gold that is rising. It is the purchasing power of fiat money measured in gold that is falling. So you need more ounces, more units of dollars, of euros, etc., to buy 1 unit of gold. And I think once you have changed this perspective, I think you see many, many things from a completely different angle.
Yes, that's I had a chapter basically on that in my book, and it's the hardest thing to get through to people that you really can't use fiat currencies as your baseline. And if you do, you can't see if you're actually making gains or if something is going up, but you're really experiencing losses because other stuff is going up quicker than whatever you're invested in. I called it wealth cycles, and I've got a book coming out on it. We'll see. So the next chart goes back to 2009, but it shows that every currency that you're measuring here, the Japanese yen, the euro, the British pound, and so on, they're all past their 2011 peak and setting record highs. So, is there anything you want to say on that chart?
Well, I think, I think last time when we spoke, I said gold is making new all-time highs in every currency, but in the US dollar. And I said it's only a question of when we will see new all-time highs in dollar terms as well. So we have seen this, and now gold is taking a small breather. But I think it's just normal, and from my point of view, and that's really the important thing. We are in a bull market, and this bull market is just getting started, and I think that people underestimate the power of price action, the power of momentum. I know so many people that now really get interested in gold, although the facts are not really different compared to 1, 2, or 3 years ago. But as the price is rising, it's reappearing on their radar screens, and they also need some sort of a confirmation from the market, and it makes their decision much easier. And also for many institutional players, per definition, they cannot be contrarians. They cannot try to pick the bottom. They need, because they've got huge career risk in the banks, in for the big fund management companies, and so on. So they need some sort of confirmation from the price action that they can recommend their investment committee, hey, why don't we take like 5 or 10% in gold? And now I think the likelihood that this is being accepted is much higher than in 2016. So we're all hurt animals, and therefore I think this train is just getting started, and I can see from so many different things and viewpoints that there's investors with extremely deep pockets standing on the sidelines, and they want to get in, and they will get in. And I think this will really be 2021 will probably the year when, first of all, inflation becomes a concern, and secondly, when large institutional players will really enter the field.
Yeah, I do think that, funds are just getting started. There's only been a few of them that have announced that they're adding gold to their portfolios, pension funds and things like that. The really big money isn't even here yet. Very few people own precious metals. It just amazes me that the opportunity still exists to get into this market with everything that is going on in the world right now. Now, in the next chart on page 19, you've added it all up. You've got gold in US dollars versus the world price of gold. So all of those all of the currencies sort of added together, the sum of all those currencies. And this is a very amazing chart. And there will come a day where, if the dollar was outperforming the other currencies, it suppresses gold. And there's going to come a day where that reverses. Do you agree with that?
Yeah, absolutely. And I think, I think this chart is important because everybody is just staring at the dollar price of gold. But, for the people in India, they don't care about the dollar price of gold. They care about the exchange rate between gold and the Indian rupee. People in Turkey, they don't care about the dollar price of gold. They care about the price of gold in the Turkish lira. And I think it's nice to see on this chart that actually the bull market in this world gold price started already in 2014 when it started making higher lows. And from my point of view, I think with the US dollar, the bullish case was mainly driven by the fact that the rate differential between the US and most other large currency areas was big. So the Federal Reserve did, I think, hike rates like 7 or 8 times, while the European Central Bank, for example, did not hike rates at all. But this argument of a rate differential is non-existent anymore, and this is basically also the reason why the euro developed quite well over the last couple of months. But as we saw in on the previous chart, from my point of view, it is. Every fiat currency is devaluing against gold. We know that there's the big question probably should be: do I think that the euro, the US dollar, the British pound, whatever, preserves my purchasing power better than gold? If you say yes, then you have to sell your gold. But my answer would be no.
If you say yes, you need to get a psychiatrist. There's something wrong.
You should stop drinking.
Right. Okay. The very next chart shows the gold bull and bear markets on page 20 here. Tell us what you think about this. But I see the 1970 to 1980 as one big bull market with a cyclical correction in the middle. I don't see them as separate bull and bear markets. So first of all, what is your definition that you're using here of bull and bear markets to determine when it's in a bear? Because I consider 1980 to 2009. I'm sorry, to 1999, 2001, that area where it reversed, a single bear market with mid-cycle corrections in it. I guess I use a much broader definition of bull and bear markets than most people. But the reason is because I don't find these mid-cycle corrections tradable. To me, you can measure the overvaluation or undervaluation of an asset class when you measure it against other things. But in the middle of the cycle, it's approaching sort of, you know that if pendulum's going to swing all the way to the other side, but in the middle of the cycle, it's nearing fair valuation. And I can tell when the cycle is, if the cycle is done yet, but I can't trade that information of now it's doing a pullback. I can't nail that top. So tell me what the methodology is here of how you determine bull and bear markets, and tell me everything that you see in this chart, because I think it's a fascinating chart. A lot of people won't understand it. So really define what this chart is when you're going through it. Well,
the official definition for bull and bear markets is, for a bear market, it would have to see a drawdown of 20%. Then the bear market has started, and the same other direction for bull market. So it's 20%. And for this chart, we use weekly data. So I think the beauty of this chart is that we're seeing, first of all, this bull market, it made 74%, which is okay, but it's fairly small compared to the previous bull market, or, for example, compared to the 1970s. But you can also see,
but it's not over yet.
Yeah,
that's the thing. It's showing
this parabolic stage.
Yeah,
like, for example, at the end of the 1970s. We didn't see that yet, so it's a fairly stable uptrend, and I think one of the most powerful arguments at the moment is in 1979 there was a very tall gentleman called Paul Volcker, and back then, as we know, the 70s were a highly inflationary or stagflationary environment, and 79 nobody believed that Paul Volcker could actually kill and stop inflation. And now we are seeing completely the opposite. Nobody believes that central banks can create inflation. Everybody says, well, they're trying so hard and they didn't get any inflation yet. But I think, Mike, one of the biggest changes in central bank policy over the last couple of years was announced in summer. And I think it was a bit underreported because many people were probably lying on the beaches and having a good time. But I think this move to average inflation targeting is really the best thing that can happen to a gold investor, because now we know the Federal Reserve will leave interest rates until 2023 at 0. And now they also said, okay, 2% inflation rate is not the ceiling. It is actually what we want to see on average. Now, as inflation was undershooting over the last couple of years, now we want inflation to overshoot. Nobody believes that they will succeed. I think at some point they will succeed because they will have to become very, very aggressive. And I think the combination of monetary stimulus and fiscal stimulus, this marriage that happened over the last couple of months, is very, very powerful to ignite inflation. So
I think it's very, very powerful, but it's also very, very dangerous. And I think that, when this thing reverts to the other extreme, there's a big potential that they could lose control over it. So anyway, this sort of wraps up the purely gold section, and we're going to get to the gold versus stocks section next. So I want to thank you so much for being here for this interview. It was great hearing your thoughts on these charts, and I encourage everybody to go to Incrementum's website and download the chart book for the In Gold We Trust report, the latest version. You want to give them that URL, John, Ronnie?
Yeah, absolutely. It's ingoldwetrust.report. You can download the chart book for free. You can download the recent edition of the In Gold We Trust report. It's 350 pages, so it's a long read for a rainy November weekend. And you can subscribe to all our research totally for free on our webpage, ingoldwetrust.report. Thank you very much.
Okay, thank you, and we'll move on to the next video.